I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of IncResearch.ca, Canada's first online financial news and research service, providing insider news and knowledge to investors. Welcome back to the show, Ted.
It's great to be back, Jim.
The federal budget, not a lot really happened in it, did it?
Well, I think that's probably the good news for investors, in that there was no, sledgehammers on investors. There was no more success taxes. Bill Morneau didn't increase taxes on capital gains. So, from that is a bit of a sigh of relief. But that's pretty, sad commentary when you think the best thing you can find in the budget is what they didn't do. Yes, sure, there are tweaks here and there that some people will like with the parental leave and that's all fine. But on the big picture initiatives that can move the needle on the economy, it was really a failure. And it was, not only was it a failure in terms of a missed opportunity to do something, particularly on the tax side. I mean, we had this indication they were going to do a tax review. Well, that's been put on hold. But it's also a missed opportunity for the Liberals to build a stronger economy for their re-election. And, which is going to be turn out to be a miscalculation on their part, because then they'll have to resort to the typical political tricks, in the year up to the end of the election, which is always, quite cynical type of policy making, where you provide a tax cut here or there, or maybe a free mortgage interest, for some people who are buying condos. It really kind of is the worst time for policy making is a government that fears it can't get reelected, so decides it's going to start handing out goodies, and that's what I'm afraid we're heading towards in the next election. But anyway, let's focus on what we've got here right now, and that is a government that seems to have it seems to be a deer blinded by the Trump headlights and doesn't know what to do with respect to the tax code, because they're afraid of what Donald Trump is going to do. Well, look, we know what Donald Trump wants to do. What's stopping the federal Liberals from making Canada more competitive with fixing the tax system? Jim, I'll tell you what's stopping them is that it's not in their DNA. Their DNA is to raise taxes and to penalize success, and to believe that the government, through all these programs and super agencies now that they're promising for innovation, is going to build the economy. Well, that's just going to be a recipe for disaster. The Liberals should be focusing on what's doable, and what's doable is making the tax code more competitive, stripping out tax benefits for corporations and people who don't need them, and reducing overall taxes. I mean, it's a pretty basic approach, pretty simple approach. They could have gone on with that work. Instead, they're dilly-dallying to see how much they can raise taxes after Trump shows his hand. And so it was really a big disappointment. Big disappointment, I think, for moderates who supported the Liberals in the last election. We just have to hope that in subsequent budgets they don't pull the trigger on more tax increases, which it seems to be what Bill Morneau and Justin Trudeau are itching to do here.
Well, the carbon tax, I noticed, was the first thing that Ronna Ambrose attacked.
Well, the carbon tax is a bit more complicated because it depends how you implement it. If it's revenue neutral, it can form the part of an overall tax initiative. But again, a blown opportunity by the federal Liberals to define their approach to the tax code. Just, a complete missed opportunity. Instead, whoever's elected the leader of the Conservative Party will be able to define that And that's a big tactical error. It's giving the Conservatives an opening, and I'm sure, unless they elect someone who's incapable, and I think, whoever they do elect is probably going to be quite calculating in their approach on, as opposition leader. They're giving the Conservatives a big opening here, and we'll see what the Conservatives do with it. But not only is there an opening on the immigration side, potentially, the Conservatives could blow that by becoming too extreme, but we'll have to see how that plays out. But there's now a huge opening on the economic front, an opening that the Liberals could have closed, could have easily got on top of, but instead they're letting Donald Trump take the lead on tax policy in Canada, and that is a very bad strategy politically.
We'll have more with Ted Dixon right after the break.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Ted Dixon. Ted, one thing I didn't hear mentioned at all in the budget was the legalization of marijuana and how much money they expected to make from it.
Well, they're going slow on that. I think they're probably going slow enough so that they can run on it again in the next election as a potential wedge issue against the Conservatives. We'll just have to see how that plays out. They're certainly stringing that initiative along, and until we figure out really how they're going to structure the industry, we won't know. I assume that they will structure it in a way that maximizes revenue to the government. I think, and to be honest with you, they would be foolish not to. Why, if you're going to legalize something like marijuana, why wouldn't the government want to get its take on it? Particularly given the, I think the consensus that although it's being legalized, it's not exactly a behavior that government should be promoting. And how do you discourage that type of consumption? You tax it. Unfortunately, the Trudeau government still believes that you should also tax success through higher taxes and potentially capital gains tax, a higher capital gains tax. As a government, what you want to do is focus on taxing those things you want to discourage and reducing or eliminating taxes on things you want to encourage, such as participation in the workforce, which means lowering personal income taxes, which, yes, the Trudeau government did for the some of the upper middle brackets, but they increased taxes on the upper upper income, success bracket, I guess if you want to call it. And they're just itching. It's pretty obvious. They're just itching to hammer away on capital gains and other types of gains that entrepreneurs would make in the economy. And instead, they believe that a one-stop shop of government programs is going to promote innovation. Well, it's going to be a total flop, and they're leaving themselves very vulnerable to re-election on the economy side. Now, that being said, I think the Canadian economy is going to do okay, and if they're lucky, they'll, it'll be a global economic rebound, and the strength of the Canadian workforce that keeps the Liberals in the game for the next election. And ironically, if Donald Trump cuts taxes and is able to move forward on his agenda, then that will also boost the Canadian economy. But there's a big risk there politically in the United States right now, as I'm sure your listeners are well aware. There's a big event coming in Washington this week on the House of Representatives bill to repeal Obamacare, the Affordable Care Act. And if Donald Trump does not get that through, it's going to really set back the market's expectations of him being able to execute on the other aspects of his agenda, namely tax reform and tax cuts. I mean, tax cuts are the big driver of this rally. The hope that there'll be increased profit margins due to tax cuts. That is one of the key factors driving this market. In our report we sent to Inc. Research subscribers this week, we laid out three factors that are driving the market right now. The hope that, low interest rates globally, despite the Fed's tinkering here, is enough to support very high valuations in the market, strong economic growth around the world, and the promise of tax cuts in the U.S. Of the three, we actually have a higher conviction on global growth than meaningful tax cuts in the U.S., but we'll have to see how that plays out. We'll get the first chapter in the tax reform drama. The first episode, I guess, will be whether Donald Trump can get the House of Representatives to repeal Obamacare. I think, if I were betting, I would bet he can eventually do it. It's not going to be pretty, but I assume he can do it. If he can't do it, oh boy, that's going to be a big setback for the U.S. market for sure.
Well, I remember when the American Health Care Act came in, the Republicans complained that, people will get used to having health care coverage, and if we get elected, they'll insist that we keep it.
Well, I think one of the strategies here is to at least get it through the House of Representatives. So the Republicans say, well, we got rid of it, but if it stalls in the Senate, which it very well could, then they'll give the Republicans something to run on in the midterm elections, saying, well, you see, we want to get rid of Obamacare, but we just can't because of all those Democrats in the Senate. You better elect more Republican senators. Now, the polls that I've seen suggest that many Americans who want to get rid of Obamacare don't really understand what that means. They bought into the slogan that Obamacare is bad, but some of them don't understand that it could put their insurance at risk. So there's a lot of odd dynamics going on in that debate, but the fact of the matter is it's a political issue for Trump that he has to master. If he gets it through the House of Representatives, the markets will probably give him the green light, saying, okay, you punted that off to the Senate, now let's get going on tax reform.
We'll have more with Ted Dixon right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Ted Dixon. Ted, nothing in the budget either about promoting a pipeline from Alberta to eastern Canada. Wouldn't that help protect Canadian oil prices if there was more demand from Canadians? And we know that oil prices and the Canadian dollar are pretty closely tied.
Well, the problem with the Energy East pipeline, which is the pipeline you're referring to, is it's sort of caught in this regulatory refit of the National Energy Board. So really, what's holding that up? Well, one of the factors holding it up is a regulatory process that will give this pipeline a fighting chance. I mean, then there's all the questions of the business case around it. What the Justin Trudeau has to hope, and Rachel Notley, is that after the next election, we don't have a government in BC that's committed to stalling the pipeline. And so that either means re-election of the BC Liberals or the BC NDP backtracking if they were to win once they get in power. So both are possible, but clearly a BC Liberal win is the most, sought-after outcome for those people who want to see the Kinder Morgan pipeline, that's the pipeline from Alberta to Vancouver, happen. So He's got one pipeline to the West Coast. He's got the Keystone likely to happen at some point down to the U.S. So we're doing better than we were a couple of years ago. So I think Energy East, we'll see how that plays out. And yes, it would be great for Alberta if it happens, but that's still a work in progress for sure.
Is it a case of there just may not be the demand for oil in the future that we have right now?
Well, that's the whole business case element. And, Jim, by the time they get the regulatory ship sailing here, where will be the demand for that type of oil on the East Coast? We don't know. We don't until we get a sense of how long this is going to take. It's just not clear. So we'll have to see how it plays out. I think, though, for the oil patch, what's more important is continued global growth momentum, which is what we're seeing based off of our Canadian insider indicators from the Canadian market. Insiders are still quite positive on the resource sectors, which are very globally economically sensitive. American insiders are not thrilled about the U.S. market. I think what we're seeing in the U.S. market is over-optimism on these tax cuts and underappreciation that if we are going to get a global reflation, it's likely going to be in the commodity area, and that's not going to do a lot for profit margins in the U.S. So yes, they may make some money on lower taxes, but as we heard from FedEx just this week, if fuel prices go up, that could easily eat into some of these tax gains that may or may not happen on a Trump tax reform. So we'll have to see how it plays out. But the U.S. market is highly, is trading at very high valuations, and the risks are quite high, both politically and also, I think, from a fundamental perspective, whether these profit margins are going to materialize the way investors expect them to.
U.S. equity markets have been climbing for 8 years. Usually you have a correction after 4. Is that one of the reasons why they're in dangerous territory?
Well, sure. There's never been a correction because valuations keep inflating thanks to central banks. Just as, home prices keep inflating in Vancouver. And of course, it was all a year and a half ago, it was all the Chinese that were doing it. Well, no, it's not all the Chinese. Yes, there's been some impact from Chinese buying. Yes, absolutely. And it might have been, one of the catalysts to spur the market. But, we don't have a flood of Asian buying in the Toronto market, yet that market is now where Vancouver was not that long ago. We've seen an uptick in condo prices. Well, that's being driven by demand thanks to the provincial government's pre-election handout of free interest rate loans, which was, which makes no economic sense, but it makes a lot of political sense. So, you've got distortions in the housing market, just as you've got distortions in the equity market. And until you get interest rates back to normal levels, you're going to continue to have these hyperinflation type of situations with asset prices unless commodity prices start to really gain some of that global liquidity. And if commodity prices start to move up higher here, and we're seeing signs of it in things like tin, that are on the move and trying to regain their highs of last year. If we do see a breakout on commodity prices, you will see it impact stock markets that have been in bubble territory, and you'll also see it impact the housing market big time because longer term interest rates will be heading higher. If that happens, not a guaranteed scenario by any stretch. It's a scenario that we see as potentially unfolding. However, these types of commodity reflation scenarios have been on the radar screen now for a number of years, and except for 2011, where we saw a big uptick, they haven't been able to regain that type of traction. But we'll see. We're starting to see some indications here that the commodity inflation may be stronger than a lot of people think. We'll have to see how that plays out over the next couple of months.
Ted, thank you so much for chatting with us.
Thanks for having me back, Jim.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca, his website, CanadianInsider.com. You're listening to HowStreet.com radio. If you have any questions, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.